Hey guys, in this video I'm going to be explaining exactly how to use support and resistance to your advantage by not using it. So yeah, a little bit of a confusing phrase, but more is going to become clear within this video. Don't forget to leave a like and join the free Discord server, which is in the description down below. And without further ado, let's just dive into this video and I hope you guys enjoy. Yeah guys, so at the beginning of this video I explained to you all that we're going to be explaining how to use support and resistance by not using it. So it may sound a little bit vague, but here is the key. So support and resistance is frequently used of course by retail traders, and if you trade and when you start trading, you're probably always going to be using it to your advantage. However, what you'll always probably see is that at a certain point in time, you're going to be shifting away from it due to the fact that it just simply does not work. So what is the main reason why people use support and resistance? Well, of course, it is easy. However, the downfalls are that it's very subjective. Every single person is going to be drawing support and resistance differently. Furthermore, the big institutional players who move the market know exactly where you will be looking for trades, and simply it's just going to be impossible, or it's going to become impossible to take trades in a good fashion, because what you'll probably see is that support and resistance is of course at times respected very well. However, more than not, you will see market manipulation occur around those levels. A perfect example is, for instance, over here where resistance is formed. However, the market shoots up, then shoots back down, so you expect support to get formed again. For instance, you see this pin bar candle over here, then you expect a reversal back up, but then we start crashing back down, then we retest it again, then we move back down. Your chart is just going to be messy and you're never going to really get the precision that you want. More examples of market manipulation around those levels of support and resistance is, for instance, over here. Support is formed, we tap in towards support, then we get that strong candle close that a lot of retail traders would be looking for to go long from. Then what you see is that the market just crashes through that area of support once again. Then resistance is formed over here at previous support. Market moves down, market moves back up in towards that higher level of resistance. However, what you see is that the market spikes above all the wicks where most people most likely would be placing their stop loss, because where would people be going short? Most likely over here on that bearish candle, the first bearish candle after tapping in towards that area of resistance. But then the market moves back up higher, moves in towards the highs, and as you guys can probably see, it's just impossible to use those levels of sort of support and resistance to your advantage in an effective way. So how should we be looking at the market then? Well, simply by using supply and demand. So a perfect example of how to use supply and demand instead of using support and resistance is over here. So in this particular situation, what you can see is that support was formed over here. Then we got resistance. So what would the average trader do? Well, the trader would go short over here on that bearish candle. So where would you be placing your stop loss? Well, above the highs. It would be targeting to form a new lower low, trading with the trend further downwards. However, what happens? Market moves back down, but then we start moving back up. So what happens to the market and how can we read the market? Well, we get a simple but very effective ascending wedge. So the 1, the 2, third touch over here. Beautiful, beautiful channel. And then a tap in towards this area of supply. So we get a 1, 2, 3 in towards supply, and then the real drop occurs. So as you guys can see, by simply using this area of support and resistance to our advantage. So how do I use that area of support and resistance to my advantage? Well, I know a lot of people are going short over here, so I know that I can just stay patient. Market comes back up. I know now, okay, retail traders have been stopped out. We've now tapped into supply and we formed that ascending channel. I now know I can start going short. So by simply using and analyzing the markets in a way that retail traders would do, I can use that as an additional confluence to take my positions within the market. So another example which I would like to show to you guys is over here on the right, and that is this position over here where you have a key level essentially over here. So this key level of support and resistance, as you guys can see, support, 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 resistance over here, support over here, support over here. So what happens? Well, the average trader sees, of course, let's say an impulse up, a pullback, impulse up, a pullback, impulse up once again, expecting further upside, but then what happens? Well, we just crash randomly through this area of support and resistance. So why do we crash through? Well, mainly because liquidity is based over here inside of this range. So as you guys can see, we have a rally, a base, then another rally. Market comes back up, or comes back down, excuse me, in towards that base, which is demand, so the D for demand, and from there we see that upside reversal once again. So by knowing that retail traders have been stopped out over here by this push in towards the downside, and now liquidity has been grabbed, and we can now potentially see that real reversal occur back up in towards the highs. So yeah guys, that is simply it. Not a very difficult video, but I think a very effective way of analyzing the charts. I hope you guys enjoyed this video. If you have any questions whatsoever, feel free to just pop them to me through Discord. Link is in the description down below, and I wish you all a fantastic day. Thanks guys.